Right. So now that we have discussed the MCQs in the MTP1 for the Jan 25, let's now come to the question and answers in the MTP1 for the Jan 25. Okay. Right. So question number 1A, during the audit of a company, CA Jack obtained written representations from the management regarding all known instances of non-compliance with the laws and regulations that should be considered in the preparation of financial statements. Right. So CA Jack obtained the written representations regarding the instances of non-compliance. However, during the audit, he observed that the information provided in this regard was incomplete, and the audit evidence indicating such non-compliance contradicted the written representations, casting a doubt on their reliability. Right? How should CA Jack proceed in this situation? Right? So that's a question from SA 580, written representations regarding the reliability of the written representations. What do we say? I. Right. So one, as an auditor, if you have doubts regarding the integrity, the ethical values, the diligence of the management, you will have a doubt regarding the reliability of the written representation. And second, as an auditor, if you find that representations are inconsistent with the other audit evidence available, which is as given in the current situation, as an auditor, first you will attempt to resolve the matter. However, if the matter remains unresolved, auditor would conclude that representations are not reliable. It would lead to a limitation on scope. And again, SA 705, modifications to the opinion, qualified or disclaimer of opinion. In the given situation, company management has not provided the complete information regarding non-compliance. If the auditor has concerns about the competence, integrity, ethical values, or the diligence of the management, or about the commitment or enforcement of these, the auditor shall determine the effect that this will have on the reliability of the written representation. So that's the first I. The above situation highlights that the auditor has obtained evidence relating to non-compliance with laws which is inconsistent with the written representation. In this respect, casting a doubt about the reliability. So inconsistent, that is the second I. As per 580, if inconsistencies have been identified, as an auditor, you will attempt to resolve the matter. Right? However, if the matter remains unresolved, right, then what does it say? Then auditor, you will have to consider the impact of the same on the audit opinion. If the auditor concludes that representations are not reliable, he will consider the impact on the audit opinion as per 705. Okay, right, now coming to question number 1B. CA Shubham, the auditor of Sigma Limited, is performing TOC and TOD using the audit sampling. During these procedures, he observed deviations in compliance with management prescribed procedure for sales transaction of small values of a product at one location during TOC. Additionally, misstatements were identified in a sample related to the small value sales transaction during TOD. How should he proceed to analyze the nature and cause of the deviation misstatement observed in the sample result, right? So that's a question from SA 530. TOC, you get the deviation, and TOD, you get the misstatement, right? So nature and cause of the deviation or the misstatement identified. Right. So one, it says as an auditor, you have to identify, right, that what is the nature of the deviation or the misstatement identified. In that deviation misstatement, as an auditor, you have to identify, is there any common feature? Right. Then you also need to consider the nature and cause of the deviation misstatement identified and the effect of the same on the audit, other areas of the audit. And it says in extremely rare circumstances. Now, normally you project it to the entire population, but it says a misstatement or a deviation could be an anomaly. That means it is not a representative of the entire population. But for that, auditor, you need to have the high degree of certainty. And for that, you need to perform the additional audit procedure. Right? So that is point number 3, that whether the deviation or the misstatement identified, is it an anomaly? That is what is true for the sample is not true for the entire population. That is why it should not be projected to the population. Okay. Question number 1C. CA Srishti, while auditing KSM Private Limited for the first time, utilized a software to analyze financial data, comparing the recorded amount in the financial statements for the current year with the preceding 2 years, right? So that means Srishti has performed the analytical procedures. Okay. Her objective was to evaluate the RMM. That means analytical procedures have been performed at the risk assessment stage. That means at the planning stage of the audit. Identify the type of procedure performed by Srishti in the given case, its relevance, and explain whether an auditor's opinion can rely only on such procedure. So whether risk assessment procedures can give you the sufficient appropriate evidence? No. Yes, risk assessment procedures only help you to assess the RMM. To obtain sufficient appropriate audit evidence, auditor, you need to perform the further audit procedure. Okay. In the given case, Srishti is performing the analytical procedures. Analytical procedures help you to identify those matters of which you were previously unaware, and it also helps you to identify the RMM. For performing analytical at risk assessment stage, auditor, you may make use of financial as well as non-financial information. Analytical procedure can also help you identify the existence of unusual transactions and events, which will help you to assess the RMM due to fraud. And risk assessment procedures help you to assess the RMM. Risk assessment procedures do not provide the sufficient appropriate audit evidence. Thus, it can be concluded that audit opinion cannot be solely based upon the risk assessment procedures. Okay, right. Coming to question number 2A. Paras has accepted the audit of financial statements of an entity. According to the SA, the auditor is required to send an engagement letter to the entity. So SA 210. What are the key areas that should be included? Right, that should be included in the audit engagement letter. So that is talking about the principal contents of the audit engagement letter. And under what circumstances is the auditor not required to record the terms of engagement in the written agreement if it is specified by the law regulation? Right. So what are the principal contents of the engagement letter? Objective and scope of the audit, responsibilities of the auditor, responsibilities of the management, identification of the AFRF, and the expected form and content of the report. And if law regulation prescribes in sufficient detail the terms of engagement, then they need not record them in a written agreement, except for the fact that law regulation applies and management acknowledges and understands its responsibility, right? So that's an important point for us to understand over there. Question number 2B. When the auditor modifies the opinion, the auditor will use the heading QO, AO, or DO as appropriate for the opinion section. Briefly explain when the auditor will issue QO, AO, or the DO. Right? So material misstatement or unable to obtain sufficient appropriate audit evidence, material but not pervasive, qualified opinion. Material misstatement, material and pervasive, adverse opinion. And unable to obtain sufficient appropriate audit evidence, material and pervasive, disclaimer of opinion. Okay, right? So now talking about the qualified. What does it say? Having obtained sufficient appropriate audit evidence, auditor concludes that the material misstatements are material but not pervasive, or unable to obtain sufficient appropriate audit evidence, and the possible effect of the material misstatement, it says, is material but not pervasive. So whenever it is material but not pervasive, it is qualified opinion. Then, having obtained sufficient appropriate audit evidence that there is a material misstatement which is material and pervasive, so that is adverse opinion. And unable to obtain sufficient appropriate audit evidence, the possible effect of the undetected misstatements could be material and pervasive, that is disclaimer of opinion. Right? That is disclaimer of opinion. Okay. Rajal Limited engaged an external practitioner, CA Rajal, to provide the assurance of its prospective financial information for the upcoming year. Prospective financial information, future, like 31st March 2050. And SAE 3400, the examination of prospective financial information. The company projected a 15% increase in revenue, estimating total sales of 75 crore driven by the expected launch of a new product. Mention the applicable EQCS and the level of assurance. So applicable EQCS, SAE. Level of assurance, moderate assurance to be given in the form of a negative assurance. Okay. And also explain how prospective financial information is different from historical financial information. Prospective financial information is related to the future events, whereas historical financial information is related to the past periods. It is related to the past events. Right. Like for preparation of the historical financial information, the accounting policies are required. For HFI means what? For historical financial information. Like that for preparation of the prospective financial information. Yes, the accounting policies will have to be followed on a consistent basis, and the management also needs to make the assumptions. Right? So, as an auditor, when you have to examine the prospective financial information, you have to check the assumptions. That whether the assumptions, you have to give a moderate assurance in the form of a negative assurance, that the assumptions are not unreasonable. Then the prospective financial information has been properly prepared based on the assumptions. So if your assumption is 10%, while preparing also 10% should be used. And all the material assumptions should be adequately disclosed in the prospective financial information. Right? So this is the responsibility of the CA. Okay, right. So let's come to the answer to this question. In the given situation, SAE will be applicable and a moderate level of assurance is to be given. Okay. In assurance report involving prospective financial information, the practitioner having obtained sufficient appropriate evidence, not audit evidence, sufficient appropriate evidence, one, to the effect that management's assumptions are not unreasonable, that is minus, minus, plus. Prospective financial information is properly prepared based on the assumption, and all the material assumptions are adequately disclosed. Okay, that then historical financial information, and then you also have the prospective financial information. Historical financial information relates to the past periods, whereas prospective financial information is future events and possible actions by an entity. So historical financial information is rooted in past events, whereas prospective financial information is related to the future events. Right? So this particular question, let us mark it as a 5-star. Important question. Right. Question 3A. Mahavir and Associates is appointed as an auditor of KBC Bank for the financial year 24. During the audit, Chandana, an article trainee, noticed that Siddharth Industries had an outstanding loan of 50 lakh on 31st March. On March 29, the company made a payment of 10 lakh, reducing the balance to 40 lakh. However, on 4th April, Siddharth Industries initiated a reversal of the transaction of 8 lakh, increasing the outstanding loan balance to 48 lakh. Right? So this is the situation of accounts regularized near about the balance sheet date, that whether there is a genuine recovery of the account or is it just a window dressing to show better financial position of the bank on 31st March. The payment and subsequent reversal occurred within a short period, with the final outstanding balance remaining 48 lakh after the reversal. Considering this scenario, what should be the response of Mahavir and Associates to this matter, particularly regarding the classification of the borrower account and the potential risk of it slipping into the NPA category? Right. So if there is no genuine reversal in the account and genuine recovery of the account shall be deemed to be an NPA. Right. The account shall be deemed to be an NPA. Right? So accounts regularized near about the balance sheet date, where a few credits are recorded just before the balance sheet date. You should check whether there is no scope for any subjectivity. If you see that there is some gadbad, some weakness on the basis of data available, the account should be deemed as an NPA. Right? Auditor should verify the sample transactions before and after the close of the year. Right? If whether there has been any transactions which have been reversed in the first few days. In the given case, 10 lakh paid and then 8 lakh reversed. It should carefully assess the classification and determine if the payment and reversal transaction indicate an attempt to prevent the account from slipping into the NPA category. If yes, then the account should be classified as an NPA in compliance with the regulatory guidelines. Okay. Yes, question number 3B. You are appointed as an auditor of prestigious township club as the auditor of the prestigious township club for the financial year 23-24. What are the key points you will consider while auditing the income and expenditure items of the club? Right. So one, you're allowed an entry into the club only when you have paid the entrance fees of the club. Right. So one, you need to check for the entrance fee. Then apart from the entrance, they also the members need to pay the annual subscription or the lifetime subscription, which you can verify from the register of members. Then it says either the subscription could be received in advance or the subscription could be in arrears. Right? So it could be received in advance or it could be in arrears. If it is in arrears, you need to check whether it is recoverable or whether it is irrecoverable. Right? Then you also need to check the arithmetical accuracy of the columns of the register of the member. Right? So that is one set of points regarding the income of the club. Now let us talk about the expense of the club. You need to verify the internal check regarding the members being charged for the prices of foodstuff. Right? Then members' accounts, whether they've been charged for all the services which they have availed from the club. Then for the services to be provided, the club needs to make the purchases. So again, you need to vouch the purchases. Now there is the sales, there is the purchases, from that will come the margins earned, right? So again, gross profits have been earned on the sale, right? The normal rate of the gross profit. And last one, exclusive point over there, management powers which have been exceeded during the year. Report the case to the managing committee, right? For confirmation by the managing committee. Right, so that is regarding the audit of the income of the club, then the expenditure of the club, and then they are also talking about the management powers, right? One more point over there regarding the management powers. Wonderful. Let's come to the next one. During the audit of a limited company, as an auditor, you discovered that a fraud amounting to 5 lakh has been committed by the company. What are the reporting requirements regarding fraud under car row? So that's a question regarding clause 11. Right, whether in clause 11A, whether any fraud on or by the company has been noticed or reported during the year. If yes, the nature and amount involved is to be reported, indicated. Second, whether any fraud reporting has been done to the central government in form ADT4 under section 143(12), and whether the auditor has taken into consideration the whistleblower complaints received by the company during the year. Right? So whether any fraud on or by the company, any fraud reporting to the central government, and the auditor has considered the whistleblower complaint received by the company during the year. Okay, right, coming to question number 4A. Karan wants to test the completeness assertion related to intangible assets reflected in the financial statements of data solution. State the audit procedure to be performed by CA Karan in this regard. Right, so now completeness of the intangible assets. Right, so if you want to check the completeness of all the patent, copyright, trademark, one, you need to obtain a schedule. In the schedule, you also need to check the arithmetical accuracy. What will be given in the schedule is the opening balance, add less, and the closing balance. Opening balance, you can check from previous year financial statements. Closing balance, you can check it from the general ledger. And then we have the points regarding the addition to intangible assets and the deletions to intangible assets. Right? So point number 1, you need to obtain the schedule of the movement in the intangible asset. Then you also need to check the mathematical accuracy. Then you need to check for the addition. And after the addition, you also need to check for the deletion. Right? For addition, an asset should be added in the list of intangible asset if it meets the criteria for recognition as an intangible asset. Then it says any expenditure incurred at the research phase cannot be capitalized. Then again, whether the addition has been done with the proper approval and whether there is a proper process like calling for quotation tender before purchasing the asset. Deletion, again, there should be the proper approval. Then the process followed for the sale. So for purchase also quotation tender, for sale also quotation tender. Right? Then after that, the management has properly recorded the deletion, that depreciation has been charged up to the date of disposal, and the resultant gain or loss has been recorded properly in the books of account. Right? So that is the completeness of the intangible assets. Okay. Question number 4B. SA 330 states that auditor shall perform and design and perform TOC to obtain evidence as to the operating effectiveness of control. Briefly discuss when such tests are to be designed and performed in accordance with 330. So that's the question regarding why TOC. You do risk assessment, then TOC, then substantive. Why not risk assessment and directly substantive? So one auditor's assessment of RMM includes an expectation that controls are operating effectively. And second, substantive procedures alone cannot provide you with the sufficient appropriate audit evidence. That is why auditor performs the TOC. If an auditor intends to place greater reliance on effectiveness of control, state its likely effect on the evidence to be obtained as a result of TOC. So if you want to put more reliance, you'll have to do more testing, more evidence. And why a higher level of assurance may be required from TOC? Why? When substantive is not able to give you the evidence, you'll have to put more reliance on the test of control. Okay, right. So why auditor? Why does the auditor do TOC? One, auditor's assessment of RMM includes an expectation. And second, substantive alone cannot provide the evidence. Right. If the auditor wants to place greater reliance on the control, more persuasive audit evidence. And when auditor wants a higher level of assurance from the control, when substantive alone, it is not possible to do. Right? Not possible to obtain the evidence only by performing the substantive procedure. Okay. Yes, question number 4C. Lotus Limited, a rapidly growing manufacturing company, appointed Riddhi and Company as auditor. The engagement team of Riddhi identified key areas requiring scrutiny, such as revenue recognition, inventory valuation, RPT. Based on the professional judgment, CA Ravi, the partner, directed the engagement team to focus on these critical areas, emphasizing the need for detailed testing to ensure the accuracy and compliance. Give some examples of factors that need to be considered by Ravi for establishing the audit strategy. Right, so factors to be considered in establishing the overall audit strategy, we have the S rare. The E over there stands for the effort. Okay, professional judgment as to which areas are significant in directing the engagement team efforts. So which areas are significant over here? Key areas, it says in directing the engagement team efforts. Which are those areas they've given over here? Revenue recognition, inventory related party. And how did they identify that these are the significant areas which require the more engagement team effort? It says these are the factors. Depends on the volume of the transaction. Then depends upon the significant and significant. Significant industry development, significant AFRF development, significant legal developments. Right? So significant industry development, significant AFRF development, and the significant legal developments. Right? And the volume of the transaction. Right? So that is regarding the which areas, professional judgment as to which areas are significant in directing the engagement team effort. ABC analysis, which areas auditor needs to put the more effort while conducting the audit. Okay. Right, question number 5A. KSJS and Associates are the auditors of Moon for 24. During an audit briefing, Sanket, the engagement partner, explained that the auditor must assemble the audit documentation in an audit file and complete the administrative process of finalizing the audit file within not more than 60 days after the date of the audit report. He also highlighted the requirements of SPC 1 regarding establishing policies and procedures for the retention, not less than 7 years from the date of the audit report. Explain the requirement regarding the timely assembly and the retention of audit file as per the EQCS. Right, so the assembly of the final audit file has to be completed on a timely basis. What is the timely basis? Not more than 60 days. What do we say? It is an administrative process. Can you perform any new procedure? No. Can you reach any new conclusion? No. It has to be only administrative. So can you delete, discard superseded document? Yes. Can you collate, cross-reference working paper? Yes. Can you sign off the completed checklist? Yes. Can you document evidence which was already discussed and agreed? Yes, you can document evidence which is already discussed and agreed. Right, so what does it say? Retention period for the file is 7 years. Okay, right, so now coming to the next question. What is that? Yes, question number 5B. Reliability of evidence depends on source, nature, and circumstances under which it is obtained, including the controls over the preparation and maintenance. Although exceptions may exist, few generalizations can be made about the reliability of the audit evidence. Considering the above, discuss the generalizations. What is that? VIDCO. What is VIDCO? Written evidence, evidence in documentary form, more reliable than the oral evidence. Evidence obtained from independent sources from outside the entity, more reliable. Evidence which is directly obtained by the auditor, more reliable. When controls in the organization are effective, internal evidence, more reliable. And original documents, more reliable than the photocopies, facsimile, etc. Right, so that's the principles useful in assessing the reliability of the audit evidence. Okay, question number 5C. Kite Private Limited acquired an immovable property of substantial value during 24, which is recorded in the financial statements as an addition to PPE. The auditor also observed that the immovable property has been mortgaged to a bank for availing credit facility. So we'll have to get a confirmation from the bank. How should the auditor verify the rights and obligation assertion for this property? Right, so now talking about the rights and obligation of the property, plant, equipment. In that over here, talking about the immovable property. Right, so for immovable property, you want to check the title deed. Is it in the name of the company? What could be the title deed, the sales deed, or the conveyance deed? Then if it has been mortgaged with the bank, financial institution, the confirmation. And again, you need to verify the entry made in the register of the charges. Verify the entry made in the register of the charges. Okay. Right, so for the addition to PPE, you want to check the title deed. Right, so you want to check the conveyance deed, sales deed, verify the title deed. If it has been mortgaged with the bank, financial institution for borrowing, confirmation, and also verify the register of the charges. Right, verify the register of the charges. Okay. Right, coming to the next question, question number 6A. KR and Associates as auditor, right, an auditor of FBP, observed that the company has implemented various controls addressing financial reporting, operational efficiency, and compliances during the preliminary evaluation. CA Karan suggests that all controls should be assessed to mitigate the RMM in the financial statements, while Rajat is of the view that only those controls deemed relevant to the audit should be assessed based on professional judgment. Comment whether the auditor should assess all the controls or limit the assessment only to those controls which are relevant for the auditor during the audit, and discuss the factors including the auditor's judgment on the relevance of the control. Right, so that's a question from risk assessment and internal control. So you need to assess only those controls which are relevant to the audit, and what are the factors that help you determine that whether a control is relevant or not relevant to the audit depends upon the materiality and the risk. Second, it depends upon the size and the nature. Then it depends upon the diversity and complexity, legal regulatory requirement. And then last, it depends upon the components of control, the complexity of the system, and how much a control is able to PDC, prevent or detect and correct a material misstatement in the financial statements on a timely basis. Right? So factors affecting whether a control is relevant to the audit or not. Okay. Next question, question number 6B. Audit program is a list of examination and verification steps to be applied and set out in such a way that the interrelationship of one step to other is clearly shown and designed, keeping in view the assertions apparent in the statement of accounts produced for audit or based on appraisal of accounting records. For example, while auditing inventory, the program may include steps to verify count, ownership rights, or valuation. Oh my God, why did we even read all this? Simply, what are the advantages of an audit program? That is what they want to ask. So, number one point regarding the advantages of an audit program is that it serves the purpose of the instructions. When instructions is given to all members of the team regarding the work to be done, then it ensures that the total perspective of the work to be done and there is no ignorance or overlooking. And no particular important aspect of the audit is overlooked. Then, based on the work to be performed, you can accordingly select the assistants, and the responsibility can also be fixed, traced back to the assistant. Right. Then it says it also facilitates the proper DSR, the control of the audit, and it's also a record of reference for the next year. And most important golden point, that it serves as an evidence in case if a charge of negligence is brought against the auditor. Right? So one beautiful word you need to remember over here is the instruction. And last one, it says it's an evidence in case if a charge of negligence is brought against the auditor in the courts of law. Right? It serves as an evidence in the courts of law. And what does it say? You do the total work, so it leads to no ignorance or the overlooking. Right? The risk of ignoring or overlooking gets reduced when you're doing your audit program in a systematic manner using an audit program. Okay. Right, so that's advantages of audit program. Next one, question number 6C, part 1. As the auditor of Guinea, you need to verify if the company has valid ownership rights over the inventory is recorded. What audit procedure will you perform to verify the company's ownership of inventory included items at the third party location? Right, so that is the rights and obligation for the inventory. Right, so to check whether the inventory is in the name of the company, you will have to check the records. You will have to check the purchases, the underlying documentation. Also check for the consigned goods and the client correspondence. Right, so that is first 3 set of points. Then it says to check whether the inventory is in the name of the company. You have to check the agreement. Right, the collateral agreement, consignment agreement, and the material purchase commitment agreement. Apart from that, whatever invoices are there for the purchase of inventory, you need to check whether those invoices are in the name of the client. Also can obtain the confirmation. And if the inventory is lying with the third party, you can obtain a declaration from the third party. Right, so 3, 3, and 3 points regarding the rights and obligation of the inventory. Right, and now coming to the last question over there. During the audit of a company, Atul noticed that company is facing significant skilled labor shortages resulting in hampering operations of the company. Company's manufacturing is dependent upon the labor coming from the villages and district of UP. However, due to job opportunities available near villages now, many are not interested in leaving their villages. Company failed to keep its commitment due to such situation, consequently lost orders and faced decreasing revenue. Fixed costs of the company remain at a high level. As a result, company is facing a liquidity crunch and is not able to pay its creditors on the time. Right, 570. The bankers of the company are not willing to help the company to tide over the crisis. Auditor has doubts over the going concern status. How should management of the company try to address auditor concern? What audit procedure may be performed by auditors in such a situation? Right, so that's the question regarding the additional audit procedures when the events or conditions have been identified. So one, you request the management to do the assessment, and last, you request the management to provide you with the written representation. Then you also ask the management what is their future plan. You also tell the management to give you a forecast which they have prepared based on their future plan. You're going to check the data and the assumptions in this forecast, and you're also going to check for any additional facts or information beyond the period of the management's assessment. Right, so request management to do the assessment, written representation, and then the FF and F, future forecast and the facts. Okay, right, so it casts an event or condition that casts a significant doubt on the going concern. Right, so one, you should ask the management what is their future plan. Based on the plan, what is the forecast? In the forecast, you're going to check the data and the assumption and any additional facts or information. So future forecast and the facts. Right, future forecast and the facts. Right, so that is a wonderful discussion of the question and answers in the MTP1 for the Jan 25 attempt. Okay.